Hello and welcome. You're watching The Money Show on ET Now with me, Shrishti Sharma. Now, it started off as just another asset management company, or the AMC, that dotted the financial landscape of India. But today, it has morphed into a behemoth. We are talking about PPFAS Mutual Fund, and its spectacular rise has impressed one and all in the Indian mutual fund industry, with some even calling it the Berkshire Hathaway of India. Let's listen into a special interaction that my colleague Kavita had with Neil Parag Parikh, who is the chairman and CEO at PPFAS Mutual Fund.
All right, so it's the Money Show, and on the Money Show today, on the Meet Your Fund Manager segment, I have Neil Parikh with me from PPFAS Mutual Fund. Thank you so much for joining in today for this very special segment, and congratulations for completing 10 years.
Thank you, Kavita.
And on that note, I want to ask you, how is your injury and how has this entire 10 years period been for you? What were those periods when you thought that, oh my God, ye nahi ho payega?
Thanks for asking. I had a leg injury, which is fine, so I'm good to go now. So again, injuries during the last 10 years. I think the biggest injury was losing my dad and our founder, Mr. Parag Parikh. That's the fund's name, Parag Parikh, right? So I think when he passed away in 2015, was obviously a big jolt because it happened so suddenly, and there was no planning as such. After him, what's going to happen. So overnight, a lot of things happened. Again, we're thinking that also at that point, people will take out money, so we have to keep some cash buffer and liquidate some assets and keep, if there's a run on the mutual fund. So those were like little scary days, and the first initial 2 years after he passed away was all about survival, more than growth or anything like that. It's about, again, rebooting yourself, making a foundation strong. We always had good foundations, but to get that trust from people that these guys are going to do the same thing that they had promised us before, and they're not going to deviate from what they were doing. That took a couple of years, so like I keep telling people see our growth now, but if you had seen it in the initial years, that from 2013 to 2019 we were barely even 1,000 crore fund,
right?
So those were tough times, and then afterwards we had some growth coming in. So interesting times.
I think the same principles have been applied to your FlexiCap fund also, because the journey starts from 2013, okay, and then the results were actually out from 2017, 18. Yeah.
The results?
FlexiCap, as in the hard work that you had put in after the launch of FlexiCap fund. Yeah.
Yes. So so hard work is paying off actually right now. The initial work that we did, the initial 5-6 years. Is what we just laid the foundation for actual growth to take place. Make sure that customer service is good, our compliance is good, our internal processes are good, and at least get that confidence from the initial investors that okay, we got a good experience and these guys are seeing true to their word. They're walking the talk.
Okay.
And that was very important to us. And for that, we also paid a lot of attention to communication with our unit holders. We have this once a year unit holders meet for our investors, which has helped us tremendously, because that creates two-way trust. It's money management, nothing but it's a profession of trust.
Right.
It's like a doctor or a lawyer. You trust the person, you'll do things with him, right? So that was the main thing, is to just build trust and build goodwill. And we thought that if performance is also decent by that time, over time we'll see a decent growth.
Exactly. But then what's the status of the fund now? If I have to just ask about Parag Parikh FlexiCap, what's the AUM like? What about your portfolio exposure and also your strategy on international investing?
Sure. Yeah, so right now the fund is about 33,000 crores. The strategy remains the same. The only thing that actually changes in the strategy is as we grow bigger, it's very hard to take meaningful exposure to smaller companies because of the liquidity and the market caps and all that stuff. So what will happen, instead of what we thought was 25 to 30 stocks is the ideal allocation that we think, and we've always been there, you might see 2, 3, 4 addition stocks, which will be smaller allocation of smaller cap, and so maybe that allocation goes to 35.
Okay.
So that's the only thing that changes when it comes to the FlexiCap, that we might add a few stocks because we can't have a meaningful allocation to that. Even so, in the portfolio will be 0.5% or something, and but we won't be able to go beyond that, in the smaller companies. So you see a larger tail there. On the international stocks, so unfortunately last year there was a we had crossed the breached the limit of international investment as an industry, which was 7 billion we had increased. So nothing has happened on that. No change or ceiling has changed on that. So it's business as usual. So our 30% allocation to international stocks has come down to about 17-18%. Now today also if someone buys the flexi cap, they will get 18% allocation to international stocks. So it's not that they're not getting international stocks, it's that allocation has come down.
So way ahead for the markets, how rocky or patchy do you think it is, or how are you analyzing it right now?
Yeah. So I think there is still a fair bit of uncertainty in the markets.
Right.
There's not nothing I would say extremely positive that's there, something that's not extremely negative also. It's just
Markets are holding up strong for you?
So some of the stocks are holding up strong for us, and even markets have done reasonably okay. I mean, I honestly we've been spoiled during the COVID years. I think we were at almost zero interest rate kind of regime. Money was flowing into the markets, and people were only seeing the market go one way. A lot of the millennials or the newer investors have not seen a bear market.
Exactly. Yeah.
For the last 10, since the financial crisis to now, there's not been a elongated bear market.
Yeah.
Now, bull market is fine, obviously. Bear market also, when sharp bear market comes up, it's okay. But what frustrates people is like market's not going anywhere.
Exactly.
Not going up, not going down. So boring markets will really frustrate people. So we've seen boring markets for the last 18 months where returns have been nothing to write about,
Yeah.
And this may continue for some time, this market not going anywhere. Means you'll see it's not going down, but it's not really going up also. It's just being where it is. That will test people's patience. And secondly, I think people have got used to, equity should give me 20% return, 19%. Now you have to tone that expectation down. I think 12-13% expectation is a decent expectation to have from the markets going forward. So if people bring their expectation down, they'll be happy.
Okay, what about the valuations in terms of market caps, large cap, mid cap and small cap? I mean, how should an investor look at it now in terms of valuations? What is your take?
Invest in a flexi cap. Because you don't have to think about any of these things, and that's exactly.
You have a bias towards large cap in this flexi cap
yes, so right now obviously there is a bias towards that, and the reason for that is that 70% of the profit pool, or I think if it's more, I don't have my numbers right, but more than 70% of the profit pool is from the large cap stocks. Yeah. So you have to be somewhere close to there. You can't have an allocation that goes very far away from that,
Right.
So automatically there will be a large cap bias in the fund. So I think the advantage of a flexi cap fund is you don't need to think about where, what, why, when should I put it in. Put in a flexi cap, the fund manager will take the call, because if that's not your first profession, then don't try to second guess, just put in a flexi cap or a diversified fund and let the fund manager make that decision for you. So there have been times when we were more on the mid cap, small cap, but right now it's definitely, but we got mid, small and large cap. Different allocations obviously, but and little more large cap stocks. Plus the international stocks is 18%, which are all mega cap stocks.
Yeah. So as an AMC, value investing has been your theme and your strategies, go-to strategy. Do you think now, because the market always walks, the journey is very cycle based, the strategy that you have for your flexi cap can be a value based, and now it's the time where you think you'll be reaping benefits, or there's still time for it?
So again, I think every growth stock was a value stock first, so it's about finding value at that time, so that's pretty much what we try to do, is to try finding value or try to find stocks which are which are hated by the people, or which are not in favor, and sometimes you get great valuation. So I'll just give you one example. Recently during COVID times, 2020, ITC was trading at it went down to 140, 150, and you had the ITC memes coming up or whatever it is, and everyone was writing of this company and there were jokes about it. But at 140 bucks, it made sense to us to buy it with a almost 8-10% dividend yield, and that's kind of the company we try to find. Try to find those kind of companies which are out of favor. And yeah, so that's kind of the
Is
strategy.
Is this a market where you're able to figure out value stocks?
Yeah, you're getting some of the good value stocks.
sectors?
So we've been buying deep value in some of the PSU stock, which has never been our favorite sector. So we've never.
This is something new.
It's something new because there was extremely deep value and high dividend yield. So downside is protected as such. There's not much downside there.
Right.
And you're getting a high dividend yield, which is great in this type of market, which is not going anywhere. At least making 7-8%, without your stock moving a little bit.
But that's just not a phase. This is something that you're going to hold on to, or trend dependent.
So that might not be a long-term holding. The PSU stocks and all might not be a long-term holding. That could be something that gives us good dividend yield, which grows a little bit. But it's something that it's not something that we'll want to hold for lifelong. There are stocks that we would hold for a very long period, but this might not be a sector that we want to hold for a very long period, but that's stock specific. When you go
apart from that, auto or any other sector?
I think banking stocks look good, at least the private sector banks. They've been taking market share from PSU banks on a yearly basis, and they're well run. They've come out of this COVID crisis really well. NPAs have been controlled, valuations are attractive, so private sector banks look good. Other than that, even some of the beaten down sectors right now, like sometimes some of the pharma or the IT names, is something you could think about picking up. But again, having a longer term approach to these, longer term view on these would make sense, because it's not like we buy a stock and expect it to go up tomorrow. There are times where for 1-2 years nothing happens to the stock, but if the valuation is good and if we think the business will also do well in the future, then it's worth waiting for these stocks.
Talking about the international exposure in your fund, so far it's 17 to 18%. How is the benefit going to the investors?
Benefit
you're still able to invest in those stocks.
So we cannot invest in those stocks. We cannot send more money outside the country to invest. What we can do are two things. One is all the dividend that we get from these stocks, however small it is, we can reinvest it back and buy foreign stocks. Other thing is, what we can do is we can sell some portion of our foreign holding and buy something else. So we can mix and match theirs in that way, but we can't send more money outside. So we've been doing a few of those things. So in fact, recently only we've sold one of our holdings in the foreign portfolio and bought the other 2 or 3 other stocks which looked attractive to us.
Okay. So going ahead, like a few quarters now, if I want to consider, the portfolio for Flexi Cap fund that you have will be bank heavy, financial BFSI heavy. Can we say that? Can we gauge that from this interaction?
I think I don't know about heavy or not. I think we have decent exposure right now to private sector, and it's not that we want to go overboard on one sector so much also. So there's obviously risk management in our fund management team where.
So how are you doing it? You're sitting on cash also?
So we're sitting on some cash also. We're sitting on about 14-15% cash also right now. Maybe that might have come down this year. This month to 12-13. But we have a decent cash exposure, which actually helps out when the markets are flat or coming down. So that cash really helps us when an opportunity comes, we are able to buy it. So that helps out. So we'll wait and watch. So we're getting a few opportunities. Some buying happens, but slow and steady. Yeah.
All right. So in coming quarters, any more fund announcement or any category specifically in debt, maybe if you're looking at?
Yeah. So I think the change in debt taxation has really made us think, and maybe we do get again, we have a conservative hybrid fund which can invest only up to 25% in equities. Yes. So to get the indexation benefit, you have to be at least 35% invested in equities, between 35 and 65%. So one of the things is we are hoping that there could be some changes in the conservative hybrid category, and if that can become 25 or 35, great. Otherwise, we are forced to probably look at other options where there's a demand from our investors that, we also want some indexation benefit where you can be invested between 35 and 65% in equities, and pretty much that, I think that's how people will probably look at investing in debt, is through hybrid funds. We were always proponents that you should keep your equity separate and your debt separate, but I think because of taxation, we are also forced to change our views, seeing that hybrid is probably a better way to invest in debt today.
All right, last question. Any mantra from your market expert that you would want to share with our viewers?
Nothing. I think the main thing is that have patience. Equity is a very long-term product. I've seen recently people getting very tired if 6 months and 1 year performance is not good. Please don't do that. I think if you need the money less than 5 years, then don't invest in equity. Any money that's beyond 5 years for you, please invest that in equities. I think we've got a good runway ahead of us, and I think over the next decade, I think there's money to be made in the markets. But for that, you need to have patience. You need to go through the ups and downs and the flat markets. And if you can do that, I think you'll be better off coming out of it.
All right. For now, boring market, but then if you stay invested, it'll be exciting for you. Thank you
Yes,
so much
thank
for
you
being
so
on the
much.
show. Thank you.
Thank you.